The electric vehicle startup, Fisker, ticker FSR, announced their financial results for Q4 of 2023. Safe to say they weren't great, given the market's reaction to the news. In this video, we'll break down why the stock tanked nearly 34% on March 1st, and why investing in the automotive business is, for the most part, a terrible idea. Starting in June 2023, Fisker had begun deliveries of their first Fisker Oceans, the company's first EV SUV. Over the span of 2023, Fisker produced 10,000 vehicles, and nearly 5,000 were delivered. Their goal is to deliver 20 to 22,000 vehicles in 2024, which was their goal for 2023, but they had to cut their production guidance multiple times last year. But at least they're starting to push out some cars now. With that said, it's no secret that EV growth is slowing as interest rates have started to rise. There aren't many people out there that are looking to buy a $50,000 or $60,000 car right now. The industry leaders Tesla and BYD have both been aggressively cutting costs as well. So that only puts more pressure on companies like Fisker, who are starting to ramp up production. But let's see what their financials look like. In Fisker's preliminary Q4 results last week, they reported that they had generated revenues of $200 million, which was an increase of $128 million over what they had in Q3. So we can see they ramped up deliveries, but that's essentially where the good news ended. Fisker's gross margins on those sales were negative 35%, by the way, so they're losing money just from trying to make and sell the cars, let alone all the other expenses they have. But the company's cash position is getting dire. Fisker reported a net loss of $463 million in the quarter. Granted, much of that was due to the conversion of convertible notes. So ignoring that aspect, the company lost around $135 million. Just research and development and capital expenditures point to the company losing around $120 to $160 million per quarter. Given Fisker only has $325 million of liquid cash, the company is only a few quarters away from going bankrupt if nothing changes. Just like every other EV company essentially. They're losing all this money even with outsourcing manufacturing to attempt at making the company more asset light than other automakers. It doesn't seem to be doing the job, at least not yet. As a result, the company issued a warning about their ability to continue as a going concern, meaning there's substantial doubt that the company will be able to continue functioning without sourcing more funding or scaling back their operations. Fisker is already laying off 15% of its workforce. Given this reality, Fisker is looking for ways to get more funding. As they announced in their results, they're in talks with a large automaker to establish a joint venture or make an investment in Fisker itself. So we don't know exactly what this agreement might entail if it actually happens, but they could bring in a large competitor to provide financial support. According to Reuters, it's likely that that large automaker they're referring to is Nissan. The two companies might have synergies because they're both in the process of launching a new EV pickup truck, so Nissan would get more exposure to that market and provide Fisker with a much-needed capital injection. But it's important to note that this partnership is not confirmed, so investors will have to see if this ends up happening or not. Back in November 2023, the CEO of Fisker said that the company was in talks with existing car makers to potentially secure additional production capacity. As I just mentioned, Fisker is launching a pickup truck, but in addition to that, a smaller SUV called the Pear. They need more capacity to produce these cars, so these negotiations were likely already ongoing for some time, if true, before things started to look bleak for the company. Another option for raising money is from an existing investor that previously funded the company through $510 million of convertible notes. Fisker's exploring raising even more money from them as well. These notes were set to mature in July and September of 2025, but as Fisker just announced, some of those notes have been converted into shares. Approximately $237 million worth of those notes have been converted, so there's still another $273 million remaining. This has led to significant dilution. The number of Class A shares has gone from 218 million in November 2023 to 456 million now, so those notes being converted more than doubled the number of Class A shares. In total, Fisker went from around 350 million shares outstanding to 589 million, so around 70% dilution just from November of this year. The remaining notes will be a big hindrance on the share price if they do get converted. One of Fisker's main selling points is this attempt to be more asset light than other car companies. They were doing this by outsourcing their manufacturing to a plant in Austria run by Magnus Steyr, and by following Tesla's model of not using dealerships to sell cars. Instead, they would sell those cars directly to consumers for the most part. Well, now Fisker has ditched their focus on the direct-to-consumer idea and has decided to expand a dealership network. So the company has 13 dealers that have officially signed agreements, and another 250 that have expressed their interest in working with the company. Look, the reality is, this is a tough industry to succeed in. Even if Fisker is going for a more capital-light business model, they're still losing hundreds of millions of dollars. That's a risky business to invest in, especially when there's so much competition in the EV space. There will be a lack of demand for EVs, at least in the short term, due to issues with charging, expensive models, higher interest rates, and general economic decline, which is a problem for a company like Fisker because they're in the middle of establishing their business. Most of these EV startups are going to fail. Again, just look at the list of all the combustion engine car producers that went out of business in the United States alone over the past 100 years or so. This is not a small list, and a list like this is where most of these new companies will end up. How confident can we really be that Fisker is going to make it? I, for one, have no idea which of these EV companies is going to succeed in the end. Tesla themselves nearly went bankrupt several times, so I wouldn't have invested in them either, and that could have easily gone wrong for investors. Fisker is entering a death spiral at this point. They'll have to continue to dilute the company to survive, which leads to a lower share price, which leads to worse and worse dilution. So then they'll have to do a reverse split, leading to more negative sentiment, which drives the price even lower, and the cycle continues. With a mixture of bad news for the company, the EV market in general, and all this dilution, Fisker's stock has fallen below $1. If they don't do a reverse split or turn things around soon, then they'll get delisted off the New York Stock Exchange, so the cycle begins. I will clarify, I'm not short Fisker, but I'm just saying that the automotive industry is one that should be avoided for a million different reasons. If you'd like to hear about some more enticing options to gain investment exposure to the energy transition, that's what I regularly discuss on this channel, so you can check that out, as well as following me on my other social media like X or Substack, links in the description. Thanks for watching.